Hello and welcome back to PWM Tea Break. I'm your host Ali Enazi, joined by my co-host Yuri Bender. Today we're thrilled to have with us the distinguished economist Sharmila Whelan. With over 30 years of experience in analysing both developed and emerging markets, Sharmila founded Westbourne Research, a firm dedicated to helping investors uncover alpha amid geopolitical and macroeconomic uncertainties. Sharmila, great to have you on the show today. As you know, it's a show where we drink tea and discuss the best stories or the biggest stories this week. I've gone for the green tea. We're going to be discussing a lot about greenwashing. What have you gone for?
Delighted to be here, and I have gone to be for chamomile.
That's a favourite I like to have usually, mostly after work. But yeah, today's a lot about greenwashing and a lot about sustainability as well.
It is, and I'm wondering whether Sharmila's saying chamomile so the markets don't panic, so everything stays calm. And I'm noticing with all these teas, Ali, they have these branding now, which is all about sustainability, organic components. So I've gone for the green tea, a very organic version of that. And I'm curious, and I'm sure our readers are curious about the current state of the sustainability market, because after the pandemic years, during which we saw a really increasing focus on ESG investing, when everybody was holed up in their houses, their flats and their bedsits, then we saw something of a backlash in 2023. And those dawn raids on the DWS building in Frankfurt, for me, that was a game changer. A fund manager, the fund manager of Deutsche Bank, one of the biggest in Europe, is getting raided because its funds are not green enough. You can't make this stuff up, can you? And you've never, you've been writing about sustainable investment, Ali. What is the mood in the industry? The US has been particularly interesting.
So the US funds, US fund houses have been, too slow to meet ESG standards for alternative investments. Well, that's according to research by LGT Capital Partners. And, they're saying that European firms are leading the way. So according to this study by LGT Capital Partners, in terms of ESG, the US fund houses are very slow in kind of adopting these practices for alternative investments. So they served a lot of private equity managers, and for European firms, 87% of private equity managers were rated excellent or good. Excellent meaning, they have institutionalized ESG practices, and good meaning they are going to that direction, but, some still lag in that direction. But the US, only 16% had an excellent rating. And, why is this? First of all, lots of regulatory pushback from many lawmakers. In 2023, around 150 anti-ESG bills and resolutions were actually proposed in 37 states. And, and it's not just pressure from lawmakers, but there's also different pressure from investors. So in Europe, you have, these big European pension plans that kind of push these ESG standards, whereas in the US it kind of differs. And also, we live in a complex world. There's a growing community, especially in the US, who are trying to push away from this green agenda, and that's really making, I guess, the US lag behind in ESG practices. And Sharmila, you've done a lot of research on sustainability. What was your research telling you about this?
Yeah, so just picking up from where you, on a couple of points that you made, and to just kind of broaden them a bit. And here in me comes out the economist, and who's always data-driven. But if you look at sustainability funds at a global level, the AUM is about 3.2 trillion, of which 2.7 trillion is Europe. Right. And again, if you look at in terms of how much of total AUM is the market share for sustainable funds, it's just about 6.2. Interestingly, in Europe, about 20% of total funds under management are sustainable. For the US, it's 1.2. So going back to your point, the US is really lagging behind. Part of it is regulatory because, we all firsthand have been seeing all the regulations coming out of Europe, where it's not a choice, it is a requirement. While in the US they've lagged behind. But also, totally agree with the point that you make about it's also about attitude and the politics and the buy-in. And reading your article, I really like the phrase you use, that in Europe we get stakeholder capitalism, while in the US it's very much shareholder capitalism. And just to finish off, that you can see this in the numbers. If you look at flows into sustainable funds over the last 2 years, they've been declining in the US.
But this attitude to capitalism, which you're highlighting, which Ali also highlighted, is very interesting in Germany at the moment, because it's something of a two-faced approach to capitalism. We've got people, the Chancellor, people in the senior echelons of the German political system say that they'd like a free market economy, but you have UniCredit buying into Commerzbank, one of the supposed national champions, and everybody's up in arms. The entire political establishment, the unions, everybody's up in arms. How can you let one of our national champions be taken over? And we've got a great opinion piece about this, very vibrant piece from Beat Whitman, former senior banker at UBS, at Julius Baer, at Credit Suisse, and he's saying basically the Germans aren't fit to run their economy. He's saying they're not taking the financial system seriously, they're not taking international relations seriously. What's your view on this, Sharmila? Is Germany today's sick man of Europe?
Well, it's certainly dragging down Europe, because Europe is slowing as an economy. And leading that slowdown is Germany. But it's not alone. We're seeing it in France. France is struggling with massive budget deficit. You're seeing it in Italy. But coming back to your point about Germany, Germany has been the number one fan and pusher of free markets, right? Whether it's trade with the rest of the world or free capital flow within it's a founding member of the Euro area, which was all about free flow of trade and goods and capital that delivers greater economic prosperity by unifying the market. And we saw that under Merkel, we saw that under Schroeder. I think what we're seeing now is a Germany that is directionless. And is that a reflection of the coalition party government that we have, that pulling in different directions? Because it's not only, suddenly wanting to hold on to national champions, but it's also the border controls they're bringing in. And at the same time, they're against, they voted against the EU imposing tariffs on Chinese EVs. So it's like, it's not a coherent vision.
And Ali, you've been looking at Germany as well, because the story about HSBC selling up its German wealth management operations to BNP Paribas. So the French bank sees massive wealth management opportunity in Germany, while HSBC very much focusing on Asia. Why do the two have such different worldviews, Ali?
Well, you have this French giant BNP Paribas, acquiring the private banking activities of HSBC in Germany. Of course, that increased their assets under management to 40 billion euros, double what it is today.
Just in Germany?
Just in Germany, that's double what it is today.
So that's very significant.
It's a strategic move for BNP Paribas. First, you've got the leading economy in Europe, Germany, albeit that, I guess last few years, maybe not as leading as it was, but it is still the leading economy in Europe. And also there's this density of wealthy clients in major cities in Germany that BNP really wants to tap into.
You're hitting the nail on the head. Dusseldorf, Frankfurt, Berlin, it's really concentrated.
Indeed. And some experts say this is, I guess, it's a marker for, I guess, development of the European private banking market. But it's also a crowded market in Germany, and it's an aging population that is in need of succession and consolidation. But for HSBC, I guess the spotlight is also on its growth strategy here. It's trying to focus on its domestic markets, that is, Asia and the UK. So I guess on one point, it's not really necessarily the HSBC leaving Europe or exiting Europe. It's HSBC actually focusing on its home market in this move.
And this home market for HSBC, Sharmila, you lived in Asia for a long time. You worked there in India, in Hong Kong, other parts of Asia. We've got an interview with Jean Chia, the Chief Investment Officer, excuse me, of Bank of Singapore. This is where the tea definitely comes in to clear the old throat.
Yeah.
Excuse me, I think I've been talking too much at home, and my wife was very glad to get me out of the office and talk with you guys today instead. Yeah. But the video interview we did with Jean, her belief is that the likes of Alibaba, Tencent, these big tech giants in the Pearl River Delta, yes, they've done well, but we need to be looking way beyond that region. We need to be looking beyond China to the Asian champions of the future, to India and the Southeast Asian economies as well. Is that a sentiment that you agree with, Sharmila?
Now, Yuri, that's a leading question you're asking because you know that what an Indian bull I've been. And, well, I went overweight Indian equities, bonds, Indian assets across the board about 3 years ago. And since the bottom in 2020, the equity markets, the Sensex is up for about 222%. And India is in a business cycle upswing, but it is a multi-year structural growth story and the strongest in Asia. And if you were to widen, where else are you looking at Asia? I think Indonesia, simply because of its control over the critical minerals that go into Industrial Revolution 4.0, for instance. 35% of nickel reserves globally are in Indonesia. And also they've been very successful in the commoditization of the mineral base. And it's got a large middle class that's growing. And I think ASEAN on the whole looks interesting.
Well, I think that growing middle class is particularly interesting because, Ali, you wrote last week about Asia's bubble tea generation who are drinking their these are the youngsters drinking the bubble tea, unlike the green tea and chamomile tea drinkers. And I think the point there is that the changing face of the consumer is just as important as the business blueprint. So I'll certainly be raising my cup to the new champions, and we'll also be keeping an eye on who are the emerging champions that are winning this new Asian Industrial Champions League that Sharmila is talking about. And Ali, I hear you also want our viewers to start sending their questions into us as well.
So from next week, if you do have any kind of questions, any burning questions you want our panelists or us to answer from the stories that we've written that week, so please do send them over on our email address or send them over on our LinkedIns, and we'll be happy to answer the questions. But on that note, it is time to end the show. A massive thank you to Sharmila, a massive thank you to my co-host, Yuri Bender. Please join us next week for another episode of PWM Tea Break. Goodbye.